Good morning and welcome to today's webcast, Provider Relief Fund Reporting and Audit Requirement. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters for Moss Adams, Aparna Venkateswaran, Senior Manager, Melaney Scott, Senior Manager, and Georgia Green, Manager. And Aparna, I will turn it over to you to get us started.
All right, thank you, Emily. Hello, everybody. Thank you for joining us today. We do have a full agenda, so I'm going to jump right in. And as the video mentioned, definitely please submit your questions as we go through the presentation, and we'll do our best to respond as quickly as we can. So for the agenda today, as the topic, the title mentioned, we are going to do a deeper dive on the review of the Provider Relief Fund distributions. We'll highlight some key points for the terms and conditions, as well as the FAQs, just some nuances to keep in mind. We'll also go over, the reporting process. As of today, HHS still hasn't released their detailed reporting specs. However, we do have some information that we can share that would help you prepare for that once they are released. We'll also go over some best practices from a documentation perspective. Regarding the cost report implications, that's really just a friendly plug here. There were some changes that came through related to how the PRF expenditures would be reported on the cost report. There is an alert in the works by our team that will be coming out to address that in more detail. And then we'll wrap up the presentation with just going over the audit requirements in terms of what those look like based on what we know so far. And additionally, just point out some resources. And if there's time at the end, we'll address any questions that we weren't able to address during the presentation. So with that, Emily, I'm going to turn it back to you for our first poll.
All right, thank you. Our first polling question today, what entity type do you represent? And your options are A, provider clinic, B, hospital, C, tribal health, D, SNS long-term care, E, other healthcare provider, or F, other non-healthcare provider. And I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit submit. I'll give everyone just another couple seconds here. right, let's go ahead and take a look at the results. Back to you.
All right, thanks, Emily. All right, looks like we have some representation across the board, primarily from our hospital community out there. So I think there'll be something relevant for everybody as we go through the information. All right, so before we dive in, kind of one last overall thing I wanted to address is, everything that we're talking about in this webcast, it's based on information we have to date, as there's definitely been a lot of moving parts. There's information that's in the FAQs and what's on the HHS website and other federal agencies that have guidance that may be applicable potentially, but all of it's subject to change because there's still a lot of pieces in flux as far as finalizing the reporting specs or the audit requirements and how that's all going to play out. So just something to keep in mind is everything we tell you today is based on what we know so far, but there could be some changes that happen. In terms of the deadlines, again, there's been a lot of movement on these deadlines. I know in the past in terms of some of the reporting and attestation that's had to be done related to the PRF funds, for example. So just keeping an eye on those deadlines and any potential extensions, that would be good just to ensure you're getting your information submitted in a timely manner. Communication, that's one of the other things that we really want to stress here. Really as it pertains to the audit requirements, the PRF fund is probably a big grant that's been provided to a lot of our organizations for the first time this year. That's a federal grant. That likely is the case. But there could be other potential grants that may potentially fall under audit requirements, even if it didn't come directly from the state, from the federal agency. So just making sure there's a plan in place, communication lines are open across all departments as needed to ensure that all information is available so that, whether it's the reporting or the audit, evaluating the audit requirements, all that information is available. And then the documentation. Again, there's a lot that's been happening the past few months, and we're still not clear on exactly what those documentation requirements are going to look like, but just keeping a clear trail of what's been done so far to kind of support the expenditures and, other information that's going to be relevant is going to be key. All right, with that, Georgia, I believe you start us off.
Georgia, are you on mute?
I'm sorry about that. Okay, so just trying to stay off the line. So today I'm covering the Provider Relief Fund and how we're going to report for that distribution. And as you probably know, if you're on this call, it is a $175 billion fund, a huge fund, originally authorized by the CARES Act and added to by the Paycheck Protection Program and Healthcare Enhancement Act. And it's come out in a lot of different waves. So it started on April 10th with the initial Medicare distribution, a $30 billion tranche, and was followed up pretty quickly with another $20 billion. Both of those went to Medicare enrolled providers. And then shortly after that, they opened up the funding to Medicaid, dental, and CHIP providers through an application process. Additionally, the Medicare providers, if you did not receive the full 2% of your annual revenue, you're able to submit your financial information, including your most recent tax filing or audited financial statement and a calculation of lost revenues from March and April. And then HHS used that to determine kind of a true-up payment to get you to your full 2% of annual revenue. They also just announced last week that they are opening this up to assisted living facilities who are neither Medicare or Medicaid enrolled, so entirely private pay. So if you have a private pay assisted living facility who hasn't gotten a payment yet under this, the time is now to get your first step of the application done, your TIN validation. That is due very soon, September 13th. So kind of last call for that unless they extend that deadline. There's also been a number of these targeted distributions, as you can see, distributions to high impact areas, rural areas, SNFs have gotten their own distribution, tribal health and safety net hospitals, and then just as recently as August 27th, this latest nursing home infection control distribution. So with each of these, when you receive a payment, you're required to log into an attestation portal and attest that you are acknowledging you're receiving it and you agree to the terms and conditions that go along with each payment. If you don't log in and do that, it essentially just defaults to that you have accepted the payment and accept the terms and conditions after 90 days. That said, it's probably advisable to get in there and just proactively attest. So these funds need to be used to prevent, prepare for, and respond to coronavirus. There cannot be duplication of funding for other sources. So as you are beginning to document what you're using the funding for, it's important to keep that in mind, that you cannot use two different sources of funding for the exact same expense, whether that's two different distributions from the Provider Relief Fund or funding that you got from another grant or philanthropy or FEMA, for example. There's been a lot of questions, and there are certainly a number of FAQs about the idea of balance billing and what's allowed in the terms and conditions. And the real thing to understand is that they want to limit patients' out-of-pocket costs to the in-network rate for COVID-19 testing and treatment. So that doesn't mean that you're still allowed to bill payers, whatever your negotiated rates with them are, you're allowed to bill that amount, and you're allowed to bill patients for the services you provide. It just can't be kind of an out-of-network cost. It needs to be an in-network rate. Additionally, one of the important terms and conditions to keep in mind is that there is a salary rate cap, executive level 2 they call it, and that is $197,300, which comes out to $16,441.67 per month. So you can still, if you are using provider relief funds toward salaries, you can still pay your employees more than this, but you cannot count more than that threshold toward these federal dollars. So, we'll talk about kind of a tracking document and preparing for documentation, but keep in mind if you're using this for salaries that you might have to do kind of a modified eligible salaries calculation. Let's see. So some FAQs about the thing we hear most often when we talk to clients is really just wanting to understand, okay, we got this money in our bank account, it mysteriously showed up. What are we allowed to use this for? That's kind of the main question, and really important to take a look at the FAQs and the guidance that we have so far about it. So in terms of the timing of expenses and lost revenue, HHS expects providers to expend the payments by July 31st, 2021. So we have a little bit of an end post in this instructions so far. They say it would be highly unusual to incur eligible expenses prior to January 1st, 2020. So you're going to be thinking about probably expenses from March 2020 going forward, but not earlier than January 1st. The expenses need to be attributable to coronavirus, but there is flexibility in terms of what you can expend the funds on. And I think about things as being in kind of two buckets. So what we have on this slide is what I think of as bucket one, things that are directly related to responding to this pandemic. Supplies and equipment, your PPE, your ventilators, your respirators, the medical equipment you might have purchased. Workforce training, emergency operations centers. So you probably had a lot of meetings with your leadership at the beginning of this and probably still ongoing. So, costs that kind of are associated with those meetings. Reporting any additional costs that you might be incurring to just report data, since different segments of healthcare have different reporting requirements to local and federal agencies. Any temporary facilities, so that might be kind of parking lot testing or curbside testing that you might have set up. or modifications that you made in your permanent facilities, and acquiring additional resources. So if you had to, rent or purchase additional facilities and equipment. Melaney, do you have anything that you'd like to add about the coronavirus expenses?
Oh, yes, thanks, Georgia. So in thinking about this expense side, or bucket one, as Georgia mentioned, think of this as your incremental expenditures above and beyond what you normally would have or historically have had. So the example of the PPP, that would be additional expenditures you've had in responding to coronavirus, and also thinking in mind of with equipment or facilities, these would not be items that were on your budget prior to COVID. These would be purchases that stemmed from strictly responding to coronavirus. And in talking with folks, some of the other areas of expenditures that they have had that fall within this bucket one would be purchasing tablets for patients or residents so that they can stay connected to their support system. Retrofitting, we've had talked to some folks who created health checkpoints coming onto their campus. So those expenditures for the materials and even extra staff to man those posts. Also retrofitting within your facility, entities who may have, as an example, created an ICU, extra ICU areas or separated areas for COVID-19 patients or residents versus non-COVID-19. Those would all be examples of what would fall under this bucket number one. Thank you, Georgia.
Thanks, Melaney. And I'm monitoring our Q&A box, and I see there's already a good question about the salary rate cap that I mentioned. Is that for all employees or executives only? And that is for all employees. So especially if you employ physicians, you probably would have some folks that are above that. So just make sure that you're doing kind of a modified payroll calculation if you are using these funds toward payroll. But so on this bucket one, this wouldn't be things like payroll. This is things like Melaney mentioned, newly purchased to respond to the pandemic. So the second part, bucket two, is on this slide, and it has to do with lost revenue. And I will say that the most common misconception that I've heard in talking to clients is folks saying, we got our provider relief funds, we're going to use it toward lost revenue, period. And that is not exactly correct. So first, let's talk about how you calculate lost revenue. The FAQs do not outline a very specific mandated way that you have to do it. They say, that which is generally reasonable, and that would be a 2020 budget. So the budget that you made before the pandemic hit versus actually what your revenue has been, budget versus actual. Or you could compare prior year, or I've seen some organizations look at, the average over the prior 3 years versus 2020 actual. So we'll see when we get the detailed reporting specifications if there's a little bit more specificity on how you must calculate lost revenue. But for now, I think you want to start doing that calculation. And essentially, this number you come up with for your lost revenue sets a cap or a spending limit for expenses that maintain healthcare delivery capacity. Essentially, HHS is giving you these provider relief funds as revenue replacement for that lost revenue, and you can use it toward paying expenses you otherwise would have had to pay for to keep the lights on and keep the doors open, just your normal operating expenses. So this bullet list here is what's listed in the FAQs. These are examples. You've got your payroll, employee health insurance, rent or mortgage, or in some cases that might be a bond payment, equipment lease payments, and EHR vendor fees, licensing fees, kind of your normal operating expenses. Melaney, do you have anything else to add here?
Yeah, thanks, Georgia. So also when thinking about the lost revenue component, there is not much in the way of true guidance, like Georgia mentioned, coming from HHS on this. And even as we quoted here, from the FAQ document that HHS encourages the use of those funds to cover those lost revenues for maintaining that healthcare capacity. But again, we haven't seen anything that indicates there would be an expectation of a one-to-one dollar tie-in like we would expect to see with the incremental expenditures, meaning not necessarily an invoice or some other very, very distinct documentation to go along with this. Really, when we think about this in light of the current guidance and information, that would be, like Georgia mentioned, there's operational expenditures that we have in place that either if we had an entity where they had to stop operations for a period of time, as an example, some dentists did just close their operations, but they still had rent payments, they still had equipment lease payments, they had all of those things, expenditures that were maintained during that time period. That would all generally tie in with that. And when I think of this, I think of we had financial statements, we had budgets to actual comparisons for time periods before COVID, and we can show and demonstrate that we continue to make those operational payments and keep things going. One other item that is not necessarily mentioned in these examples that HHS has given us is debt covenant payments as well. Depending on the entity type, maintaining a debt covenant requirements would also be fall into this category. So this one is a little bit squishier in that it's not as cut and dry as us that are used to when we think of how do we support and substantiate the amount of this. And we'll talk about this in a little bit when we get into the documentation components. But really with this one, I think what's going to be critical is really that support for how the lost revenue was calculated. Thank you, Georgia.
Thanks. And I'm starting to look at some of the questions, so many questions in the box. And I just want to let everyone know, in case it's not clear, we will circle back with you via email if we don't have time to answer it on this call today. So feel free to put your questions in there and we'll reach out, maybe schedule a call. But we definitely want to be in touch with you. I saw a question about, that they have been counting their CARES funding toward lost revenue, but we haven't been matching the funds to expenses. Should we be doing that? And my answer is yes. I think it's important to take these funds and match them to specific expenses in a specific time period. We don't have that reporting spec exactly yet, but I think it will be important, and that is what HHS is going to want to see is what did you expend these funds on. I also saw a question about if you have do you have to show a negative margin? Do you have to show losses in order to to count funds toward lost revenue? And that's not exactly it. You don't have to show losses, but if you had less profits than the prior year or less profits than what were in your budget, that would be your lost revenue. That would be kind of the incremental loss from the pandemic. Okay, we'll keep going. I know I don't want to take up too much of Aparna's time. So just please note that nearly all of the terms and conditions mirror each other and are basically exactly the same as each other for the various general distribution and targeted distributions. But I do want to call attention that the most recent one for nursing homes, this infection control distribution that you got on August 27th, actually has somewhat different terms and conditions. And these, I'm not going to read these 5 bullet points, but please note that these are what's in your terms and conditions, and you're going to need to tie your expenses to these items rather than kind of the more broad bucket 1 and 2 that we just discussed. Also, for those of you that are rural health clinics or FQHCs or other health centers, you probably have gotten some distributions from HRSA. And those have some of those also have kind of a limitations on and on the definition of what are eligible expenses, and they have their own FAQs. We could probably do a whole other webinar just about that, and you've already started reporting to HRSA on how you're using those funds. But just keep that in mind. It's a lot to keep straight, but just keep that in mind if you got both provider relief funds and funds from HRSA for the FQHCs and RHCs, that you're going to want to keep those separated and track the expenses separately. So with that, I will turn it over to Emily for our second polling question.
Great, thank you. Our second polling question: which of the following is an eligible expenditure per current HHS guidance? A, supplies used to provide healthcare services for possible or actual COVID patients. B, building or constructing temporary structures to expand COVID response capacity. C, equipment used to provide healthcare services for possible or actual COVID patients. Or D, all of the above. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And if you are having any technical difficulties seeing the polls, you might try refreshing your browser. And we'll give everyone just a couple more seconds on this one. All right, let's go ahead and take a look at the results. Back to you.
Thanks, Emily. So next we'll take a look at who's required to report to HHS for these provider relief funds. In previous guidance, we had seen it was over $150,000 received, but more recent guidance has lowered that threshold to $10,000. So if you received more than $10,000 in the aggregate from the Provider Relief Fund, you're going to need to complete the reporting process. They have given a timeline. This is definitely subject to change, especially because the original timeline said that the reporting spec would be released on August 17th, which it hasn't been. So, we're still on standby for that, but we are keenly aware that the portal should open on October 1st of this year, and that the deadline to report on your expenses through the end of the calendar year is 45 days after the end of the calendar year on February 15th, 2021. So if all of your funds have been expended, then that would be your final report. However, if you have unexpended funds at the end of the calendar year, you would do this first report, February 15th, and then you would have the opportunity to do a second and final report by July 31st of 2021. So essentially that's kind of the end post of when you must have expended the funds and complete the reporting on the funds. Melaney, I'll hand it over to you.
Great, thank you, Georgia. So in contemplating the reporting that's going to be expected for just the general reporting under the provider relief funds as mentioned in the terms and conditions. As Georgia mentioned, we are still waiting for detailed guidance on what this is going to look like, with that portal expected to open October 1st. But we can look to a different agency where some folks have started reporting. They actually started reporting back in July, and that was actually under HRSA. So some of those folks that did receive provider relief funds through HRSA have done at least one reporting. And if we take a look at what information was included in that reporting package requirement, it was mainly just free-form text boxes, as well as some just options for answers of questions. But the information that was provided was an identification of how much of those funds had been utilized to date. And this was also mentioned in most, if not all, of the terms and conditions for the Provider Relief Fund, but it was asking for reporting of activity by category. So examples, staff and patient safety. What sorts of activities had occurred around that area, as well as testing, maintaining or increasing healthcare capacity, and also construction. So just thinking about those different areas where the funds may have been utilized or applied, and then also reporting of any barriers or issues in utilizing that funding as well. So it was pretty straightforward, but I know this has been on a lot of folks' minds is what are we going to need to be reporting for the provider relief side of it. And while we still don't know for sure, this at least can give us maybe some ideas to start framing around to be prepared should that portal open on October 1st as anticipated. And I think, Georgia, or is there, well, I think one other piece to look at, and this was one of the Code of Federal Regulation, the CFR references, that was noted within the terms and conditions did talk about financial reporting requirements. And so there's some other information we can glean from there, but it's basically being able to pull information out of our accounting systems that would be able to demonstrate and show how these funds have been utilized. And then now thinking about just specifically looking at thinking about the documentation and maybe some best practices or ideas. One of which is to create some general ledger coding to track both the receipt of the funds and the expenses thereof. And been thinking about, and most of us have this in place, but maintaining that documentation for those expenditures. Meaning, and especially if we're considering that bucket one that we talked about of those incremental expenditures. So that would be if we take the example of the PPE and you have kind of a normal expenditure level, but what was that additional expenditure level? Is that noted and clearly evident how much of those components were related to responding to coronavirus? Thinking about if a portion of your facility was retrofitted to meet the needs of responding to coronavirus, are there, oftentimes there was discussions that occurred ahead of time. Are those meeting notes documented in the date of that and the decision that was made to then support and underlie the expenditures that are also documented and retained to also substantiate, say, that entire retrofit or new building. And then thinking about that, developing the analysis of those expenditures. And this is where, and I believe somebody had asked the question about, is there some sort of HHS provided listing of all these different the general distribution components and the targeted allocations and what can be used for what? Not necessarily. The onerous kind of goes on to each entity to create their own tracking document for this. But really encourage, if you haven't already, to start putting together extracts out of your system to be able to gear up for any potential audits you may have, as well as really being able to target and identify what expense was used for which. And one caveat here is, depending on your organizational structure, general distributions, at least with the current guidance and information, those can be used across the breadth of your organization for facilitating expenditures or that lost revenue component. Those targeted allocations, those really are set and kind of only attributable to the entity or the 10 that receives that distribution or allocation. So that would be a really important aspect as well, is to have that tracking mechanism to make sure that you are keeping that confined within those parameters as well. And then, of course, really what could be most helpful is preparing a master tracker document, and especially if you've received both general distribution and targeted allocations, as well as funding from other programs, for example, FEMA or the Paycheck Protection Paycheck Protection Program, the PPP loan, because they do all have different things that those expenditures can be used for, and we want to be mindful of, like mentioned here, preventing that duplication between the programs. And again, a reference to the CFR in the terms and conditions, which was 75.302, does make note that an entity's account systems must allow for the tracing of funds to a level of expenditures that would be allow to establish that those funds were used according to the terms and conditions. So it's kind of a broad term, but it's just making sure that whatever you have set up in your current system of tracking can allow for establishing that those funds really were used in accordance with the different and varying terms and conditions. Okay, some additional documentation tips. With regards to your lost revenue methodology, and of course it's recommended be consistent with your calculation. So whatever methodology you have elected, carry that out from month to month to month. And for a lot of folks, you had to report your estimated lost revenues for March and April of 2020 as part of application processes for additional PRF funding. And I really recommended to use that methodology unless something has occurred that would really substantially predicate changing from that. But not in addition to being consistent, we would also really recommend you document and retain your methodology for how you determined which funding source to use, as well, or which method to use to calculate. In addition to having the underlying reporting available for your calculation. So as an example, some individuals had provided us with their methodology, and it was, of course, a spreadsheet, which is always, a good and helpful idea. And then, but that's all that was in the documentation was various tabs of information. Really would recommend document that whole entire methodology. What were your assumptions you made? What were some of the judgments that went into this? It's fairly straightforward if one uses a budget to actual methodology. We've talked with some folks who are utilizing a different strategy, such as 1 or 2 months of census information, and would really recommend documenting why you chose those 2 months, how one can know that those 2 months are representative of all the rest of the time periods. So just have an eye to those elements of it as far as really those key points that went into documenting your methodology. And if it's applicable, your communication to the board, have that documented in the minutes and retained as well and at easy access, should the need be to provide that. Because we have seen guidance and information coming out, at one point it really was on a daily basis, new information or modified information was coming forth. At the point in time when you are preparing information, really suggest downloading a copy of documentation you're using or screenshots with the dates so that you can have that defensibility later on that at the point in time this was the guidance you had when you started into calculations or documentation. And then we've got thinking about how long to retain the records. We've noted here 6 years potentially. If we look into the support as noted in the CFR reference within the terms and conditions, that CFR reference makes mention of 3 years with some exceptions. However, we're noting to possibly have a 6-year consideration because there's been talk of these funds potentially having a False Claims Act implications, and those can have up to a 6-year look-back period. So it just really be mindful of not only the very strict element that we pulled in, say, within those terms and conditions, but some other ancillary components that could predicate a longer retention period as well. And then, of course, with all things, just maintaining and being mindful of, our standard accounting best practices for documentation. Okay, Georgia, now we can talk about a specific example of a tracker.
Fantastic. Thank you, Melaney. So Melaney mentioned that the master tracker is kind of the key to preventing duplication, and I've seen quite a few questions about what we mean by duplication in the comments, and I hope that this master tracker helps provide some clarity. So this is truly just a very abbreviated version of what we recommend everyone implement. Because, our eyes are getting older, we don't want to make you squint too hard. This could have, 15 columns of different distributions you got from the Provider Relief Fund. Maybe you got a PPP loan or another SBA loan or another type of loan. Maybe you have applied for FEMA. I'm working with a handful of organizations on their FEMA applications as well. And if you have questions about FEMA, please do feel free to reach out to me. And you might have gotten awards from other associations. Maybe you got something from your state hospital association or from your county or coronavirus relief funds that would have been passed through from either state or tribal or county government. So just keep in mind this is not meant to be definitive, it's just an example, but you want to show what's the name of the fund, what period does it cover, what agency gave it to you, what was the date that you received it, and what is the official date of the federal award. That information might be forthcoming. And then, of course, what was the amount that you received? I put nice round numbers on here. I'm sure you got not nice round numbers. And then if you can describe, what were the eligible expenses for this award and what were the eligible expenses that you are using it for. So this is sort of just a high level of generally what's eligible, but what you want to have on your master tracker is, hey, we used our general distribution to pay our lease on our property for the months of March through August. And you're being very specific about what items or services were paid for and what time frame you're referring to. This will really help your auditor in the future. It'll help your board or anyone, and it'll certainly help you guide your reporting when the time comes for that. Also, of course, you want to track when the reporting is due for the various funds that you've gotten. And any action items that might have to do with that. For example, applying for forgiveness on your PPP loan. I did see, for example, a question that was specifically asked was, well, we got the PPP loan, so can we still use the Provider Relief Fund toward our salaries? And that would be a perfect example of where you have to be careful about duplication. So your PPP loan probably you're using for the period of April and May. If you need to extend it out the 24 weeks, maybe longer than that. But you would want to have on your master tracker, if you're using your provider relief funds for salary, that's starting in June, and you're not overlapping pay periods with the PPP loan, so that you're not duplicating the same expense, same period. Melaney, did I miss anything here?
No, Georgia, thank you. I think you covered that very well. Thank you.
Okay. All right. Fantastic. So we're going to transition to the second part of our webinar, talking about audit requirements. And we'll start with our third poll. So Emily, please take it away.
Thank you. Our third polling question, what is your experience level with audits of federal awards? And your options are A, very familiar with audit requirements, won't need additional guidance. B, I've gone through an audit of federal awards, single or program-specific audit recently, may need additional guidance. Or C, never gone through an audit of federal awards, will need additional guidance. And for those of you that would like a copy of today's slide deck, you can download them from the folder that says Slide Deck and Handouts to the right of the slide view. We will also be sending the slides via email after the webcast. We'll give everyone a few more seconds here. And just a reminder, we are on our third polling question, so we'll have one more coming up. All right, let's go ahead and take a look at the results. Back to you.
All right, thanks, Emily. So it looks like predominantly the majority of our attendees today have not gone through an audit of federal awards, which is helpful to know because a lot of the slides that I've got coming up, want to make sure I'm tailoring as best I can. So with that, we'll dive right in. So in terms of what's listed in the FAQs by the HHS for the audit requirements, they've kind of broken it out for the nonprofit entities, the government entities, our tribes, other healthcare entities, and higher education. The audit requirement kicks in if the annual total federal awards expended in a fiscal year are $750,000 or more. And there's, the single audit reference, there's series of audit requirements that we'll go into in a little bit more detail that would kick in. For the for-profit or commercial entities, the requirements are a little bit different. And one thing I wanted to highlight here too that's also different is the way the FAQs read currently. The eligibility or requirement for the audit kicks in for awards received in the organization's fiscal year of $750,000 or more. Now, one thing to note here, the use of the word received for the commercial or for-profit entities versus expended for the nonprofits and government entities, that is a difference. It's not something that is consistent with the single audit language in the CFR 75 subpart F. So it is one thing we're trying to get clarification on from HHS for the commercial and for-profit entities of, is it really the receipt of those funds, or is it the expenditure or expensing of those funds that would kick in the audit requirement? But for now, given what the FAQs say, going off of received. And so for the commercial entities, there are two options as far as satisfying the audit requirement. One would be getting a financial statement audit related to the award or the financial statements in general that are conducted in accordance with government auditing standards, or otherwise known as Yellow Book. And then the other option would be an audit in conformance with the 45 CFR subpart F. Now, what does all that mean? We'll go into that in a minute. In terms of what the audit would look like, give it away here and say we still don't have any specific guidance on what the compliance requirements are that HHS is expecting us to audit as far as compliance in terms of, the expenses or how the funds were used. We are expecting the compliance supplement addendum. So the compliance supplement is effectively an audit guide that's issued by the Office of Management and Budget, and it includes all the different programs that federal agencies administer and they pass down funds through. And there's series of compliance requirements that they would deem important that need to be tested for compliance. And so that's kind of the audit guide that we use to test compliance for those clients where we do the single audits. However, related to the COVID-19 grants that have been given out this year, we still don't have that guidance. We're expecting that to come out hopefully in October or November, but I think everything's been delayed across the board this year, so we're not quite sure if that timing will stick, but that's the latest we know there. All right, so in terms of just for those that process better visually, this graph just covers exactly what I said on the previous slide. It just has some of the reporting requirements that Georgia also went over earlier. So for those organizations that got provider relief funds that were below the 750 threshold but greater than 10,000, there's the reporting requirements, and that's listed kind of on the left side of the graph. And then on the right is where we talk about the audit requirements. And again, it's expended $750,000 or more for the not-for-profit government agencies. And for now, based on the FAQs, it's $750,000 or more received by the for-profit or commercial entities. In terms of the timing of the audit, generally as a best practice, it's ideal to do that in connection with the financial statement audit. So, getting the two pieces done at the same time. However, given the timing of when the compliance supplement addendum will be released, that does contain the guidance that's needed to be able to audit these funds. Wanted to also highlight the actual deadline in supporting in submitting these reporting packages. And so generally the deadline is the audit report would be due either to the Federal Audit Clearinghouse. So the Federal Audit Clearinghouse is basically a database where not-for-profit and government agencies would be submitting their reporting package or it's directly due to HHS, so the commercial entities, they have the option when their audit requirement is satisfied of submitting their audit packet directly to HHS. And that deadline is either 9 months after the fiscal year end or 30 days from the receipt of the audit report, whichever is earlier. So as I was saying earlier, what do these different audit options mean? So for those that on the call that, have experience with single audit, have had several grants where you've been subject to this is going to look very familiar. But generally, it's, the audit is conducted in accordance with government auditing standards. It generally covers the consolidated operations of the auditee. So if there's multiple subsidiaries or multiple locations, all of that's pulled together in one reporting package. The nuances here that are in addition to the financial statement audit is there is some additional work that's done around internal controls over financial reporting. There's a separate report that's included as part of the audit package. And then lastly, there's understanding and testing of the controls over compliance with the federal programs, and then the actual compliance with the federal program. So there's a lot of testing around that needs to be done. The same procedures and process is true also for a program-specific audit. The only difference between the single audit and the program-specific audit is that it's generally called a program-specific audit if the auditee or the organization is spending federal awards under only one program. So they're not getting grants from multiple sources that may be subject to audit. It's only one program. And the audit would typically just cover the financial statements of that program or the financial information of that program. The other pieces of it in terms of the testing of controls over compliance and the testing of compliance itself remain the same. And then the last option that I had gone over previously in terms of the financial audit in accordance with generally accepted government auditing standards, again, there's a couple options. It can cover the entire operation, so the consolidated financial statements of the organization, or again, it could be limited just to the federal program itself. So for those that have just the PRF funds, then the audit could be done just of those funds. So some key terms to keep in mind kind of across the board. So for those that may fall under the single audit or the program-specific audit, there's, kind of the schedule that would be audited is called a CFA, or a Schedule of Expenditures of Federal Awards. And it's effectively listing all the different sources of federal funds. So there's, there's kind of a format to it in terms of reporting what those are. So there's, the name of the agency, there's a CFDA number or an assistance, it's called an assistance listing that kind of identifies which agency and what program those funds are with. And for those, again, that have single audits already in place, something to keep in mind when you're preparing your CFAs for the current year and going forward, any COVID-related award expenditures, so whether this is a brand new grant like the PRF or incremental awards on existing programs, the compliance supplement that just was released a couple weeks ago is recommending that those be identified separately. So, the PRF fund would be, COVID-19, start the prefix of the program name with COVID-19, and then go on with the rest of the name. For the awards that may have come in on existing programs, this is incremental new money that came in because of COVID, you would just have two line items within that. So it would be the regular program and then COVID-19, name of the program, and what those dollars were. But in terms of considering, how the program dollars are evaluated in total, it would still look at everything together. So it's not looking just at the COVID-19 related amounts or just looking at the, existing amounts. So something just to keep in mind. I had also mentioned on the previous slide or a couple of previous slides about compliance requirements. And so, these are effectively, what is the federal agency expecting organizations to comply with to be able to satisfy the requirements of the program? And as I've mentioned also for the PRF, there's obviously no guidance out there yet other than what's in the FAQs. And so a couple of the key ones I wanted to highlight relate to the first two in this table here. So the activities allowed or unallowed, allowable costs or cost principles. And that's effectively going back to the expenditures that the FAQs indicate can be used in how these funds are applied. So it's, the additional healthcare expenses due to COVID, so the PPE, other supplies, and then, potentially any expenses necessary to maintain the healthcare delivery that may have otherwise been covered by the lost revenue. And so, these are just some key terms to keep in mind as you're evaluating documentation and gathering kind of the information together. Another compliance requirement that may be important here under the PRF would be kind of the suspension and debarment. There's very clear rules around, making sure that vendors that are paid in federal dollars, so federal dollars are used to purchase equipment or other types of services from vendors, that they are not on the suspended or debarred list, because that could be a potential non-compliance. And then the reporting is probably the other one. Obviously, we've been saying a few times that the reporting specs are still in the works, but that will be a key part of the compliance that we will likely be looking at as part of the audit. So just some of these to keep in mind as you continue to go forward and gather the information. Also just considering, what are federal awards? So we've talked a lot about the PRF award, grant, and we've talked about HRSA and, even the PPP loan, but just what are some awards that would really fall under the audit requirement versus not? And so this list isn't all-inclusive, but just some of the, items to keep in mind. Generally, the federal awards are going to include grants, any type of cost reimbursement contracts that are reimbursed with federal dollars, any type of cooperative agreements. If you're receiving grants via the state or a local agency, so for example, in the state of California, I know some of the hospitals have received grants through the California Hospital Association. That potentially could be a federal award, especially if the CHA is passing those dollars through. Any kind of donated property could potentially be considered a federal award. So it's going to be important to really make sure and understand the completeness of all grants that may have been received this year to ensure that you know what your complete population is, and that's really going to drive what the audit requirement would be. And then really just highlight a couple of things that would not be considered federal or are exempt from audit requirements. The PPP loan, the SBA has mentioned, that's definitely exempt from audit requirements, so it wouldn't be considered under this federal award for audit purposes. For those that may have been able to use the employee retention tax credits, that's not considered a federal award either. So this slide just lists, again, some of the grants to consider, not all inclusive by any means, but I think it captures some of the big tranches of provider relief fund distributions that have come through. And then we've also just included some of the other programs that may fall under the consideration for making sure you have a complete schedule of federal awards. So in terms of how you can prepare, step one would be determining the type of award requirement you have, right? Audit requirement you have, whether it's the single audit, the program-specific audit, or just the financial audit of the program under the generally accepted government auditing standards. The key here is going to be completeness of the list of awards, because if you have more than one program, and again, it could be coming through as a pass-through via the state or local. So just, again, it's very important to make sure that's complete, because if that's the case, if you have more than one federal program or more than one source of federal funds, you would fall into the single audit bucket potentially. So just wanting to keep in mind that you have a complete population of that. And then as Melaney and Georgia have talked about previously, right, just some of the controls, documentation really, it's going to be documenting the process and methodology for calculating the lost revenues, in terms of looking at the expenses, whether it's the healthcare expenditures or the expenses to maintain healthcare delivery. Again, making sure that there's clear documentation around what was the process that was in place to evaluate and ensure there was appropriate separation of these expenses. There wasn't any kind of double counting that may have happened. And, what was the control in place to ensure that didn't happen, so that, at the end of the day, when information's got to be pulled together, whether it's for reporting or for audit purposes, you have a clear trail. In terms of the compliance supplement, so I'd mentioned earlier, this is kind of the audit guide that, auditors use to audit the federal programs. There is some unique considerations that I mentioned earlier around preparation of the CFA. So this section, Appendix 7, would be a good one to maybe review on your own as well. It's available on the Office of Management and Budget's website. And then the OMB had issued some memoranda to federal agencies to kind of provide administrative and financial relief. So there's a few of them out there, and so to see if your particular organization may be eligible for one of these relief options, just a best practice to maybe search, the name of your federal agency and adoption of OMB memo in Google, and it will likely give you the response to that. So just, again, it's all helpful to keep in mind what those options are. And then lastly, again, everything right now could be subject to change just because of the COVID-19 related requirements not having been released. They're still being worked on by the agencies. So just some things to keep in mind as you continue to try and prepare as best you can for what may be coming down the pipeline here. All right, Georgia, back to you.
Okay, I know we're at the top of the hour, so I just want to mention that we have a lot of ability to help you with navigating all of this. It might be very new to some organizations. Of course, we are a tax and audit firm, accounting firm, so we can help you conduct the audit that you choose to do, that you need to do. We can help evaluate your master tracker and assess that you have the appropriate supporting documentation for reporting. We can provide subject matter expertise and guidance related to the reporting, both for the provider relief funds and other reporting that you might have to do under other grants. We can provide technical assistance if you're running into any problems, help you with troubleshooting. We also do FEMA applications and other grant applications, and really just look at things from a strategic perspective to really try to optimize. Have you gotten all the funds that you're entitled to? Are there other opportunities out there on the table that you could take advantage of? And we can kind of come at it with that perspective. So unfortunately, we don't have a lot more time for Q&A, so we'll just go to our last polling question.
All right, thank you. And thank you everyone for sticking around for this final polling question. How confident are you that you are prepared to report on your federal funding and complete the audit requirements? And your options are A, I am highly confident that we're ready, we've got it covered. B, I'm fairly confident that we're on the right track, but we could use a little help to prepare. C, we need an auditor, let's chat. D, we're a nonprofit or governmental organization and would like to chat about FEMA funding. E, we received the SBA PPP loan and have questions. Or F, not applicable. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the CPE progress window. We'll give everyone just a couple more seconds on this last poll. All right, let's go ahead and see what everyone had to say. Great, and I would like to thank everyone for your participation today. We certainly covered a lot of information and we are out of time for questions. However, you may keep submitting questions and we will be following up with any questions we didn't get to after the webcast. And before we go, I'd like to point out that we have many resources available to you in our slide deck and handouts widget to the right of the slide view. You'll find a link to our new Healthcare Content Hub, which has lots of industry-specific information to help you navigate the business of healthcare, as well as our events and COVID-19 resources. We'd like to take this opportunity to announce that our 2020 Healthcare Executive Webcast Series, a 7-part series running from September 16th through November 19th, is now open for registration. Our series kicks off next week on September 16th with our first session, Deal Land, What's Happening on the Landscape of Healthcare Transactions. And you can learn more or register by clicking on the link in the slide deck and handouts widget. And thank you so much to Aparna, Melaney, and Georgia for a great presentation today. As I mentioned, we are out of time for questions. We will be following up with you after the webcast, or you may reach out directly to any of our presenters here. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts widget. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.